Hello and welcome to AI Market News by LM. We're going to deconstruct a pretty big event today, that global tech sell-off that really sent some shockwaves through the market. So what exactly sparked it, and where did all the money go? Let's dive in and find out. Yeah, a brutal session. That's how a lot of news commentary put it, and honestly, that pretty much nails it. It really sets the stage for what we saw. A huge wave of selling just came in, hit hard, hit fast, and definitely caught a lot of people by surprise. You just saw a trail of red across all the trading screens. So, what exactly happened here? Okay, so here's our game plan. First up, we're going to look at that initial tech tumble on Wall Street. Then we'll see how it just spilled over and went global. After that, we'll track the money, see where it went in the flight to safe havens. Then we'll try to get a read on the market's mood by gauging fear. And finally, we'll peek over the horizon to see what's coming up next. All right, first up, Wall Street's tech tumble. This whole thing really kicked off right in the heart of the US markets. And it was the tech sector, no surprise, that really took the biggest hit. So if we look at the numbers, the major US indices, they all closed sharply lower. I mean, the S&P 500 dropped a significant 1.2%. But the real story, the real pain, was in the tech-heavy NASDAQ 100. It tumbled over 2%. That tells us everything we need to know. The weakness was absolutely severe, and it was centered squarely on technology stocks. So the big question is, why? What was the catalyst? Well, it really seems to have been triggered by growing anxiety over what analysts were calling lofty valuations. You know, after this absolutely massive rally we've seen, especially in AI and chip stocks, investors just started getting nervous. The feeling was that prices had just gone up way too far, way too fast. And just to put the sheer scale of this into perspective, look at this number, $500 billion. That's how much market value was wiped from the Philadelphia Semiconductor Index in a single day. I mean, that is a massive, massive hit to a sector that's been the market's absolute darling for months. Right, so Section 2, how this thing went global. And you know how it is in today's world, right? A storm on Wall Street almost never stays contained. And just as we'd expect, that negative sentiment, it just spread like wildfire overnight. And yeah, the global contagion was crystal clear. Asian markets reacted almost immediately. We saw South Korea's Kospi plunge over 3%, and Japan's Nikkei dropped more than 2%. And that pessimism just carried right on through to the European session, with futures all pointing to a lower open. It was just a classic, textbook risk-off cascade. Okay, so when fear takes over like this, investors don't just sell everything. They also buy. But they buy very different kinds of things. This is where we track that classic rotation out of risky assets like tech stocks and into what we call safe havens. And that brings us to this key concept, risk-off sentiment. It sounds technical, but it's really just the fancy financial term for what we all do when we get nervous. We look for safety, right? In the markets, that means pulling money out of things like stocks and putting it into assets that are considered a whole lot more stable. So, where did all that capital actually go? Well, we saw some really clear moves into the traditional safe havens. Investors started buying up US Treasury bonds, which pushes their prices higher and, in turn, makes their yields fall. Gold, you know, the classic store of value, it also climbed. And in the currency markets, this is interesting, both the Japanese yen and the US dollar strengthened a lot. And this chart here gives us a great visual of exactly that. Look at the strength in the Japanese yen and the US dollar. Then on the flip side, you've got the so-called risk-on currencies. Think the Australian dollar, which is often tied to hopes for global growth, and it just weakened significantly. It's a perfect picture of a flight to safety. All right, so we've seen the numbers, but what about the emotion that's driving all this? Let's take a look at a really popular indicator that tries to measure the psychological state of the market, basically what everyone is feeling. And that tool is the Fear and Greed Index. It's pretty cool, actually. It's a composite tool that pulls together 7 different market indicators, things like market momentum, options trading, the demand for bonds, and it boils it all down to a single reading of investor sentiment. It's a really quick way to see if fear or greed is in the driver's seat. And no big surprise here, right now, that needle is pointing squarely at fear. This totally reflects that widespread selling we saw and that big rush into the safe haven assets we were just talking about. It really suggests that caution and defensiveness have completely taken over from the optimism that was driving the market higher. But, an index reading is one thing. Is it actually backed up by what's happening under the surface of the market? Let's look at one of the key components that really confirms this fearful sentiment. And this is what we call market breadth. And wow, it tells a powerful story. On the New York Stock Exchange, for every single stock that was rising, nearly 3 were falling. Now that shows us this wasn't just about a few big tech names taking a hit. The weakness was incredibly broad. It confirms that the fear was absolutely widespread across the entire market. So, after a session like that, the big question is, where do we go from here? In our final section, let's look at the key events and data points that are now on pretty much every single investor's radar. First off, we just can't ignore the political backdrop, right? With things going on like a record-long US government shutdown, there's this added layer of uncertainty about economic policy and stability. And that, of course, is going to make investors a lot less willing to take on risk. And with market sentiment this fragile, any upcoming economic data becomes even more critical. As we can see on investing.com, there are several really high-impact releases scheduled that could absolutely sway the market one way or the other. So what's on the immediate docket? Well, we've got the ADP employment report coming up. That's a key preview of the all-important jobs market. Then there's the ISM Services PMI, which is a really vital pulse check on the largest part of the US economy. Any sign of weakness in these reports, and it could just add more fuel to this fire. All right, let's wrap this up and summarize the crucial takeaways. First, that big rally in tech stocks, it hit a wall over valuation concerns, and that triggered a global sell-off. Second, this sparked a classic flight to safety, which boosted assets like the Japanese yen and US treasuries. Third, the market sentiment is deep in fear territory, and that's confirmed by that really weak market breadth. And finally, all eyes are now on political news and that upcoming economic data for any clues on where we go next. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.